Let's welcome in our next guest. Sharmila Joshi is now joining us. Sharmila, you heard the management at Titan just before this. What will be your call on the stock? You think any fall is a buying opportunity, or after a 30-40% run-up that you've already seen this year, it's still a very expensive stock?
I think just given the fact that it's run up so much, you need to be a little cautious, because I do believe that some of the volume growth that they've seen this quarter has been because there was a shift towards organized players in the jewelry market as a result of demonetization. And that demonetization also happened at a time when you do see some sort of buying coming in because it's marriage season, etc. But traditionally people do prefer to stick with their old jewelers. So you need to see how much of this actually is a business that they can sustain. So from that perspective, I would wait it out one more quarter to see whether they can keep this the kind of volume growth that we saw, and B, as you said, secondly, the stock has had a huge run up. But that said, I think within the jewelry space, this would still be a stock that I would continue to like. I think in almost every other term, it is better than the other players within that space.
Considering what Havells is trading at, or Godrej is trading at after results, or HUL after the recent run-up, this is also not a very expensive stock then?
Yeah.
On a relative basis.
Yeah, when you put it like that, definitely Havells seems to have run up way ahead of itself. And as you know, that's a stock that I've recommended in the past. But Titan is a little slower to grow than that. I mean, it is not exactly a momentum play. So the fact that it has actually gone up so much should mean that it needs to consolidate a little more. But I think I would agree, whether it is a Havells, whether it is a Godrej, whether it is a Titan, post numbers, I think they all now really need to just sort of spend some time at the prices they are at before they can move higher.
Right. And actually, if they do, 1 year of consolidation, it would start to make them look attractive again?
I doubt you'll get a 1 year of consolidation, very honestly, because the kind of mood market is in. So if you were to even hear that the kind of growth that market is expecting is continuing in any of these stocks, I'm sure you'll see higher levels. But I think you just need to see that confirmation for another quarter or so.
Right. Any other names after results which you like? Anything on the mid-cap, small-cap side that you have recently liked after numbers?
Well, nothing comes to mind immediately, but I think we just saw a good set of numbers from Vedanta. So that's not a stock that I like. But I think within the metal space, we have seen fairly a good performance from Novelis. So I think Hindalco looks good to me at this price. I think among the banking names, I liked DCB post numbers. And I also liked the kind of commentary that the management gave that in the...
I just wanted to say Hindalco is a buy now as well.
Yes.
Yeah. Okay. Can you go ahead, the commentary?
Yeah. So I was talking of DCB Bank because, you saw this stock correct a goodish bit when they spoke of expanding their branch network, etc. But I think, now they're saying that is kind of done, and by October they'll have 300 branches, and then they don't see any more capital expansion. Also, I think, some of the other private banks are going through that whole overstatement or whatever understatement of NPA kind of issue. So I think from that perspective also, I think DCB Bank seems to have sort of dodged that bullet as well as the really bad NPA kind of bullet. So I think from both perspectives, whether it is the kind of numbers they gave, the kind of NII growth they had, their NPA levels, the fact that they will now consolidate at the 300 kind of branches without adding too many. I think all these things make the stock quite attractive to me. I think you can buy this stock with a target of closer to 220.
Do you think in the longer run it will continue to grow?
They are growing from a smaller base. So as compared to some of the other banks, they have a better chance. But, this space has now really become sort of, who gets it right in terms of the kind of digital offering they have, etc. And so far, they seem to be on a good wicket. So I think not just DCB, but every other banking stock now, you really need to see how they plan their future strategy, which is why there was a lot of excitement, for instance, if you remember when HDFC Bank started. And I think, they've also done a reasonably good job in the kind of market strategy that they've had. So, as I'm saying, you just need to watch all these, because for the larger player, in fact, it's more tricky to kind of, grow at the pace that they are at. And so far, they've not disappointed. HDFC Bank, I mean, with eyes closed, you can almost say that, they're going to grow 20% per quarter. So that's pretty fantastic. I mean, HDFC Bank is almost like too good a story to believe, sort of, because I don't remember how many quarters in the past, whether it is 16 or 20 quarters, we've seen almost, that 1920 kind of growth coming from them. So for them to keep doing that, I think is now perhaps going to be more challenging than for these smaller names to, clock in good growth.
Right. But do you think financial services is one of the best plays?
I would think so, because it will also sort of reflect. I mean, if you start seeing this space do well, it also means that some of the other problems that are there at a macroeconomic level are getting sorted out. So whether it is the NPA issues for a lot of these banks, the leverage sectors, whether it's power, whether it's capital goods. When you actually see corporate India starting to borrow again, it will, I think, reflect in their numbers, and you will see that lending book improve. And so from that perspective also, I think it's a very important sector to always sort of track.
Right. What do you make of NBFCs or, microfinance companies? Do you think that's also a sector, or, maybe extending it to names like Edelweiss or Motilal Oswal? Do you think that's also a space which can do well?
It has done well, right? I mean, in the last year or two, I think it's been one of the best performing sectors. So going ahead, hopefully it will differentiate a little bit, and you will see some of the models doing better than the others. We've had a phase where almost everything has sort of given you very good returns. And there's no reason to sort of think that why they shouldn't, because I think clearly they found a niche area where the banking sector was not really addressing this requirement, and they sort of stepped in, some of the micro lending space, or even I think some of these broking houses with the kind of books that they have now. I mean, you just, I think, need to be a little careful there from the point of view that especially in the microfinance names, whether they can continue to show the kind of growth that they've had over these last 2 years. But I think some of these other NBFC names, I would be a lot more comfortable, the housing finance names or the other NBFCs like a Bajaj Finance or something. I think those are probably better placed at this point in time. I even like an Ujjivan, for instance, at this price. So I would continue to like these stocks.
Right, but do you think that, these names are already pricing in growth, or after the recent correction, there is some value into them?
See, everything is has run up, so it's very difficult to actually find something that you would say is absolutely pure value at this point in time. So everything is sort of factoring in some kind of attractive growth going ahead. So, I mean, that would be an underlying caveat for almost anything that you recommend at this point in time, that you have to sort of keep a track as to how market is moving, because obviously the momentum play is doing better in the market like this. If you choose to be in a sector which has seen a sharp run up, then you have to keep that at the back of your mind. But that doesn't mean that they will not be able to, manage the same growth going ahead. Perhaps you need to give some of these another quarter again, because I think at the start of the year, you did see a lot of people, a lot of managements come out and say that their collections, etc., are coming back to normal post demonetization. But I think, in terms of growth, whether they can actually do the kind of growth, if the business actually grows the way it used to earlier, probably it may take another quarter, which is why we did see some pain again in NBFCs in this quarter post numbers. But that's what I'm saying. I think you need to give it another quarter. But to my mind, this would be an attractive space going ahead as well.
Right, and what would that mean for home finance companies? The flashes that you're getting at the bottom of your screen, that ICICI has cut home loan rates by about 30 basis points. You think competition over there is increasing?
It seems to be, because clearly banks have the money to lend now, and this is a good sector to be in, housing finance, because I'm sure the defaults, etc., are much lower in housing finance than they are in some of the other lending, consumer sort of lending products that banks would have. But again, I think, over here, perhaps whether banks can actually capture market share on the basis of lower interest rate is something that will that remains to be seen. Because I think that even in the past, even among the housing finance companies, you did have a differentiation in terms of the kind of rates that they had, and in spite of that, companies grew. So it is also the reach, also the ease with which they give a loan, etc. So a lot of factors coming in. What are the kind of tie-ups they have? So it remains to be seen, but definitely I think the competition for housing finance companies has gone up.
We're talking to Sharmila Joshi. She's still with us. Ma'am, if you could just tell us about housing finance in terms of businesses. Time and again we've seen this competition every time when ICICI launched a product or any SBI came out and cut a rate. But do you think they are perpetual business? They'll continue to grow?
That I mean is definitely it's a function of what kind of demand you have for housing. But yeah, I think it's safe to assume.
In the last so many years, demand for housing has been low, but these businesses have grown.
Exactly, because I think that the price of housing is such that people are definitely required to take a loan to fund that requirement, and I think the sheer need for affordable housing is something that is perhaps what plays out in the favor of housing finance companies. And I think even in the recent past, the kind of moves the government has made in making affordable housing cheaper or better available at better rates, better interest rates, etc., will go a long way in sort of ensuring that their growth doesn't slow down. So I think maybe not in the absolute metros, but in the second tier and some of the smaller cities, you would continue to see this demand constant. And I don't foresee, at least in the near future, housing finance companies not sort of doing well. I think they should be able to meet whatever targets they set for themselves.
Right. As far as affordable housing is concerned, do you expect that area to do pretty well with the recent launches happening in the affordable space, with the way most of the talk around affordable housing has been? Do you expect that sector to do well?
See, I think now this has sort of become a market which is more in the favor of the buyer. Earlier, it was actually the seller or the developer or the builder, who sort of called all the shots. But now I think, with the change in regulation, with this whole RERA coming into effect, as well as the fact that, because of this whole demonetization drive, you've had sort of less black money in the system. It will mean that a lot of the deals that you see in housing will be more realistic in terms of, at what price they get done, or what is actually offered for that price. Because both things are now sort of under attack simultaneously. The rules which builders and developers have to follow have become far more stringent, and at the same time cheap money or money at which they could access very easily has now come down. So I think it's great for buyers really, but how actually you could see a slump in buying, which is what I hear from the real estate market, that perhaps you don't see too many people buying homes out there. But I think that's a matter of time, and this year should see sort of a bottoming out, not just in terms of interest rate, but also you should see demand slowly beginning to pick up, especially as we were discussing in the affordable housing bit.
So there is housing finance, there are these real estate players, but do you think that suppliers of these could also be interesting players?
There I'm, by suppliers you mean like the
ceramic players, Havels, anything?
Yeah, in fact, I've never really recommended housing, meaning the actual real estate players, because I think there again is a lot of grey, and what are the land banks, what price they've had at, etc., etc. It's a little too complicated, almost on a name-by-name basis. Some of them have corporate governance issues, etc. So I've always found this proxy sort of play much better, whether it's a Kajaria Ceramics, whether it's the paint company. I would even put housing finance companies within that play. Century Ply, Kajaria Ceramics, as you mentioned, these are some of the stocks that I have recommended in the past. Somani, I would add to that list. So I think that is definitely going to be an interesting play as well.
Right. Just in terms of some names that are not doing that well today. So you have an idea which is down 7% after numbers. Don't you think that markets are, forgetting the fact that they have done good cost control, or do you think markets want to see that cost control much more? So only if they sustain that, then markets will give it that multiple.
See, I think for Idea now, the whole story is really going to be more to do with how they deal with Vodafone moves ahead. Because I think they sort of, the shock in the numbers was really more last quarter than this quarter. And I think, that sort of gave you an indication that Perhaps now everything is out there and the due diligence or whatever the approval process can start. So I think it's going to be more a function of that, and probably post this correction it will now come to a price where you may find it attractive to really re-enter the stock or whatever. But I think it's a little risky now that that expectation sort of plays out of the way. But there's no telling. I mean, if you sort of hear positive news flow in terms of their, if they were to, for instance, get their approvals and all faster, then I think you could see a run on the stock. But I don't think this is, yes, I mean, results did play a factor, but perhaps people are now not so interested in owning the stock from a really longer term sort of a perspective.
Right. Let's welcome in Lavlesh Sharma also now. He's joining us from Indore. Lavlesh, what are your top picks?
Hi, yes, I'll be looking at banking as of now. Currently Kotak Mahindra Bank, I'm looking at this stock has given already a good rally in the past from 920 odd levels, but still it's on our buy list. I think Kotak Mahindra Bank we are targeting at around 985 to 1010. Maybe not just in a day or two, but yeah, in a couple of trading sessions. So with that, our stop loss in Kotak Mahindra Bank on the downside comes at 960. With Kotak Mahindra Bank, we are also looking at metal as specifically the good buying momentum we have seen in the last 2 days. Hindalco is looking good at 198, 199 odd levels. We believe Hindalco will somewhat try to touch 205, 206 over a period of time. And Hindalco, our stop loss is placed at 196 on closing basis. With that, also our third pick is from metal space itself. JSW Steel we are recommending to our clients as well. At 202, we expect JSW Steel somewhat at 212. In coming sessions, and on the downside, the risk reward is also favorable. We have placed our stop loss at around 198 on closing basis.
Right. Any call on Glenmark?
Yeah, I think it will be like catching a falling knife. We are still bearish. The swing which we have seen in pharma space right now, this will be way too early to catch buy under strategy. As far as Glenmark is specifically concerned, we still believe the kind of selling pressure we have seen in the last couple of days. There are much more downside to be seen towards 670, 680 in coming sessions.
Right. Sharmila, what will be your call on Glenmark? It's down 6% today, and of course, it was down some 15-20% on Friday as well.
Well, I didn't think that the numbers had anything, to suggest why the stock should be down so much. So perhaps it's the other concerns which are taking their toll. So I think for me, it's now coming to a level you can buy it.
Right, but numbers have led to a downgrade of 20% because there was this one drug that they have which really did not play out pretty well and which was expected to reduce the debt. So do you think one should start to buy now, or let just these numbers, these EPS estimate digest in the market? It may take a while. The stock may be slightly higher and not at these levels. But do you think that markets should at least digest these numbers first?
Well, I think if you saw the kind of fall the stock had on Friday and what we are seeing today, it seems to be in a hurry to digest the numbers. So I think it's now coming to a price where you can look at it.
Right. Any other pharma picks? You think pharma as a sector has not done well? So is it getting into the attractive zone?
That's what I've been thinking for the last couple of months. But so far, really, that theory hasn't played out. None of the leverage sectors, in fact, if you had bought them, have really given you those kind of returns to warrant buying into them. But yes, I think from a business perspective, I do like some of the names. I do like a Sun Pharma at this price. Biocon have had a recommendation for quite some time.
If anybody is getting into these names, you think that it's some time before you start to see returns?
Yes, clearly I think because I mean you're not really seeing US FDA concerns go away in a hurry, and companies are taking their time to address those. And I think even as you address old ones, you have new observations or whatever. So perhaps some time of adjustment is going on where valuation versus the kind of concerns and how soon they sort them, etc. So that period of adjustment is sort of currently underway. I don't think the stocks will fall too much from current levels, but yes, as you said, for them to actually start going up, it could be a while.
Right, Lavlesh, any other pharma picks that you have?
We are right now, tracking Dr. Reddy at current levels. As a trading perspective, I don't think it may, give that kind of a risk-reward ratio. But if someone is trying to go for, low levels of favorable risk-reward kind of a trade, I think Dr. Reddy is looking good. This particular stock has, potential of valuing 4 to 5 more concerned. I think apart from Dr. Reddy, we can look at Ajanta Pharma as well. 1637, 1630 continues to be a strong support. So one can look at 1675 in Ajanta Pharma with a stop loss at 1620 in the next couple of days.
Right. Just request you both to stay on with us. Markets are just about to close. I'll just come back to you all after that. So if I look at the markets, 45 points higher for the Nifty. Again, it's a record close, 9,445. But markets have been doing a record close, and that's why 9,444 also is a record close. It was record close on Friday, and that has led to a record move today as well. Yes Bank about 11 to 12 points lower, 1,471, continues to move down after that disclosure. You have Axis, you have Ambuja Cement flat with a negative bias. ITC is up around 1% or so, and Kotak Mahindra Bank is up about 15 rupees. Bharti Airtel 1 rupee lower, 364, and Infosys down about 10 rupees, 1.1% lower. IOC up 1.6%, 442. Coal India 277, about 1 rupee higher. And you have Tata Motors, which is up around 80 paisa or so. Zee Entertainment 1 rupee lower, 525, and Reliance down about 7 rupees, 1,343. Reliance has not done that well after the recent surge post the Reliance Jio data. Tata Motors about 1 rupee lower. Sun Pharma 1 rupee lower, 654. HDFC Limited 10 rupees higher, and you had Tech Mahindra, which is up around 1 to 2 rupees. IndusInd Bank 8 rupees higher. Tata Steel 4.5% move. It was among the top gainers. Remember, they declare numbers tomorrow. Most likely it should come out post market hours, but 9.7 million shares. That's around 19 to 20 rupees. 456 for Tata Steel, 4.5% higher. Extremely strong as far as movement is concerned. So that's Tata Steel for you. Let's look at Hindalco as well. 4% higher, 198, 199 for Hindalco. 18 million shares traded. That's about 8 rupees higher. 198, 199 for Hindalco Limited. Dr. Reddy's 3.5% higher, 266 for 2,667 for Dr. Reddy's, not 266, 2,666. Bosch was up around 2.7, and Lupin also did well. So the entire pharma pack actually did well. From the top 5 gainers, you had Dr. Reddy's, Lupin among the top gainers. So one can say that pharma sector did decently well. However, Sun Pharma and Aurobindo, they are also part of the Nifty, but they did not particularly do that well. If we actually look at the top losers, Aurobindo was the top loser, was down 1.6. You had Infosys, which was down 1%, and Eicher Motors was also on the lower side. That's Aurobindo Pharma for you, 1.6% lower, 613. Let's look at Infosys as well, 1.1%, and Eicher Motors also was down about 1% or so. 28,915 for Eicher Motors. Bharti Infratel and Hero MotoCorp are among the marginal losers. Let's look at some gainers as well and what's happening in the mid-cap space. So India Cement continues to do well. 220, 7.5 million shares traded. Very, very strong move for India Cement, 7.5 million shares. And recently, it has done extremely well as well. So it's not that it's a cheap stock anymore, but still, buying continues for that name. Let's look at Piramal Enterprises as well. It was reacting to numbers, up around 10% or so at a point of time. I think it closed around 8.5% higher. But nevertheless was up, it was up 10.5. I think it went up to about 12%, 1.4 odd million shares traded. So that was also among the gainers. V2 Retail did very, very well. So that was a name which was up 11%. Did extremely well today. In fact, since morning, it was doing well. I did not see the numbers or anything which has come because there was no particular announcement that came in. 1.7 million shares, very, very strong in terms of movement. You have Tourism Finance Corporation up 9%. Geojit Financial Services was up close to 10%. Mirza International did well, was up close to about 8.5 to 9%. Hathway Cables was up 6.5%. So these are names that did decently well. Manpasand Beverages was up 5.5, 745 for Manpasand Beverages. That's also a name that did well. Let's look at some marginal losers as well. So Suzlon was down 5%. Idea was down 6%. Glenmark was down 5%, and Inox Wind was also down about 17%. You had J&K Bank, which reacted to numbers, down about 3% or so. Sharmila, what will be your call on Inox Wind and Suzlon? Do you think it's a sector which people just punish if results are not good?
Very honestly, if you heard the management of Inox Wind, there was no real positive takeaway that you could have from that, because there seems to be a genuine issue with states not sort of renewing their PPFAs, etc., and that has hit the stock, and they didn't sound very optimistic as to how soon the situation was going to rectify. And very honestly, Suzlon is not a stock that I've liked now for the longest time. So that's never been one of my recommendations.
Right, but with states not accepting those PPAs, order book becomes quite bleak, or outlook on order book becomes quite weak.
Absolutely, and that was very evident in Inox Wind's management call, that they don't really see how soon the situation will rectify, and they came to a stage where those agreements were not getting signed. So that's not like the best place to be in really for a company in that space.
Right, Lavlesh, what will be your call on wind sector?
Yeah, we are not tracking particularly, the kind of patterns we are seeing. We don't see any kind of, favorable risk reward as well. I mean, Suzlon, one of the stocks we like at 17, but at this point of time also, risk reward won't be favorable. So right now we are not tracking specifically wind sector in perspective.
Right. In terms of power sector, any calls that you have?
Yes, I think you mentioned Tata Power. I was looking at the charts right now. One of the stock that has, very good risk reward, opportunity as well. So one can look at Tata Power as an investment perspective, not just as a trading idea, but over a couple of periods. This stock has a very high, probability that it may test 87 to 88 going forward. It's trading at its, very long-term averages, near very long-term averages. So risk reward is also favorable. One can go long in Tata Power. We can expect 87 in a couple of weeks. With that, 79 is our stop loss on closing basis.
What will be your call on PSU banks? PNB declares numbers tomorrow. Any view?
See, PSU banks, if one is looking at a couple of months, we are very bullish, specifically PSU banks, as far as you talk about PNB, Bank of Baroda, Canara Bank, all of them has given a very, good long-term breakouts. So if one can look at if one wants to look at 3 to 4 days, I don't think it would be suitable, since we are looking at volatility and that might not be suitable. But in case someone wants to add PNB, I think one can have a time horizon of 2 to 3 months. Let the volatility settle down. This particular stock has a very good support at 164 to 163. I think that's where the demand comes in. So one can look at this stock at those levels. It can turn back, hit 171, 170. Though we will recommend fresh buying above 180 into the portfolios.
Right, Sharmila, what will be your call on some of the PSU banking names? A lot of them declare numbers today.
I think we'll have to wait and see the numbers, because what we've really seen is that there is no sort of one this thing that we can go by, that all of them will be bad or all of them will be good. So some of the smaller PSU banks haven't really had that great a showing at this quarter, and I would expect the pressure to be there. But PNB has worked hard because some of their problems were sort of cited much before some of the other PSU banks. So in that sense, perhaps they could be in a better position. So I think it's best to see the numbers, seeing that some of these stocks have had a fairly decent run up, over the last 2-3 months.
Right, Sharmila, thank you so much for taking out time for us. Lavlesh, always a pleasure talking to you.